All right, ladies and gentlemen, the stock market is dropping again today. And, well, there's a big reason why. And I think if you are an educated investor, you saw this, but even some people were still a little confused. And I want to clarify what it was. And it's really solely one reason is trade talks. Sure, that's going to weigh, and we're going to see how that plays out tomorrow. And one thing to watch for the development of this is going to be the China trade data, their GDP and their trade deficit, all that comes out tonight at 7 p.m. Pacific. So we're going to see that. And then tomorrow we get the non-farm payrolls, which will have an effect. But the move today is coming from central banks and the ECB. And there's a couple things. We talked about it on stream today. So also make sure you guys check out this stream. And I'm going to have some poll questions here. If you go to the top right and press I, you'll see the live streaming channel. This is the main channel here, but you'll get the questions, and make sure you guys subscribe to the live stream channel. And also, if you guys could like this video, only if you like it, realistically, but if this is the content you want to see, like the video. YouTube is been weird lately, so if you like the video, it's going to make sure you're getting presented with this. And as I'm posting a lot of videos, I want to make sure you guys don't miss it, because I am going to post another video talking about the yield curve and even more about the market, real indicator between corrections and crashes. But today's move is very important, and right now this is live. The market is still going down, and it's kind of going to approach lows. It has gone in literally the 14-day. It closed the gap here from the 14th of February, and this is now well below the 2800 support level that a lot of people have talked about. And it looks like volatility is picking up. We're now below 200 points, and I said if it goes anywhere above 200 points and holds there, that's not too good. So the point, though, today was the ECB. So there was a big surprise, and I have an article that sums it up here. And really the main point is this. It says, while analysts had expected the ECB, and that's the European Central Bank, president to strike a dovish tone, policymakers went much further than anticipated. It was very, very dovish, and really they unleashed easing. And now, first, the ECB extended its so-called forward guidance on ultra-low interest rates, saying it doesn't expect to begin lifting them until at least early 2020. And now this is the big difference. That's compared to its earlier plan to leave them on hold, or at least through the end of the summer. So when the market was first coming down, and they announced this, I believe, last month or two, and they said, okay, they said dovish, they announced that it was going down. This is what a lot of the central banks, including the Fed, did. But now they went further beyond, and now this is an important signal for the markets, because now this brought it home to investors, because now it was okay. We could have assumed anything, they say something, we've been filling in the gaps, but now ECB, the European, they confirmed lower guidance, lower economic growth, and now even more, literally, there's cheap loans. So let me explain this here, what it says. Second, the ECB launched its third iteration of a program of cheap loans known as Targeted Long-Term Refinancing Operations, or TLTROs, to Eurozone banks. So this made it where this is their easing in a way. This is kind of like their 0% rates, or even the interbank rate that we have here, but this is making it more accessible. But they're trying to spur liquidity, just like we saw even China do, but obviously not on such a crazy scale. So this is important. And again, it all came as ECB staff slashed their macroeconomic forecasts, including reducing the outlook for 2019 GDP growth to 1.1 from a previous 1.7, and signaling inflation will take even longer to reach central bank's targets of near but just below 2%. So again, this is important just because they're all slashing their estimates. We've seen stuff with the Fed. It's kind of, they don't have the ECB London and this and that like we have the Fed, and you're seeing all these different GDP things. But this is centralized, and this is not good, because now you have the China tension still weighing on the market, but now you're also going to get euro growth. So, 15, or I believe 30% of the S&P earnings comes from China, and now you get another 10-15% coming from Europe. These are areas where growth and stuff, and that's why when we see the data for China tomorrow, that's even going to give us more guidance into, okay, how has this deficit played out and where is the money going? But now you saw our trade data come out, I believe, on Monday or Tuesday, and we're running one of the biggest deficits. And it seems like now, this is why I'm going to make a follow-up video talking crashes and corrections, simply because a lot of the data now we're getting. So after this run up, the underlyings are starting to come down a little bit. We got to pay some attention to that. So this is very important, but all in all, this is Europe now kind of just gave the signal of, hey, it's worse than expected because, again, that's what happened. Investors were expecting, okay, it's bad, but now by adding more stimulus and changing it, saying, hey, we're going to look for 6 months out to now, they're saying, well, it's actually, we're going to need a whole nother year now. We're expecting it. They're saying it's going to be prolonged. And now it wasn't a surprise that this growth was going down. And that's what you guys got to see with the markets, that once, it's like I said with China, it becomes a gray swan. Once, the first time it's a shocker, oh my gosh, I can't believe this is happening. But now they're like, okay, yeah, we expected it to go down. But now this is a signal that it could have been worse than before, and now they're kind of, you could see kind of a walk down. So how markets are going to react is important. The next thing I brought up, because this is what caused the market drop, I'm very, very confident in that today, because this is I said this on stream live, and that's why I said watch the channel. You guys could see how we traded it this morning. But come around, I believe 1:30, right here, this is when literally the European markets closed, and from there the markets, oh wait, hold on, let me get rid of this UVXY here. I believe it was it 1:30? No, 12:30. But I think 12:30, yeah, this is when the European markets closed. From there the markets ripped up and it looked great. And then now I even said, as we start to get other markets and other data coming out and other futures overseas moving, then you start to see this reaction. But ultimately, that's something to watch out for too. As we start to see, it becomes this, which came first now, the chicken or the egg cycle. The US markets are going to react while European markets are open. When they close, it gives a little breather, but then other markets start to open, futures, and then they start to see what America did, and then they start to react from that too. And China is an interesting point of discussion here too, with their stock market and the trade talks. But if you see, their stock market's been going up, but most other global stocks have actually been coming down. So if they start to come down, that'll be something to pay attention to. But this is very, very important in the grand scope of, okay, there is probably a problem occurring, but now you can't get too jumpy, and we're going to see the development. So that's why. So if any of you guys were confused what caused this was not trade talks. And I want to make sure, the other issues, this has a weighing in, or people are saying, well, this is the market baking in trade talks. No, this was literally the ECB confirming slower than expected growth. So I'll leave it there. Subscribe, like the video, please. If this is something you liked, and comment below, answer the poll. I'd love to hear you guys' thoughts on this. Peace.